When I really started to take day trading seriously, I have a very analytical background, so my mind always goes to how can I quantify this? Like, what can I look at that gives me something tangible that is not my opinion, that is not my gut feelings or my bias because of what I read or what someone tells me? I need to understand how I can go into any trading day with a legitimate bias, bullish, bearish, but based on data.
Our very first guest, we thought it was appropriate since we've been relying on a software a lot. We're bringing in the CEO and founder of Edgeful, André Arslanian.
Thank you for having me. Super excited to be here. I have a very analytical background, so my mind always goes to how can I quantify this? Like, what can I look at that gives me something tangible that is not my opinion, that is not my gut feelings or my bias because of what I read or what someone tells me? I need to understand how I can go into any trading day with a legitimate bias, bullish, bearish, but based on data. When I researched the different strategies, different concepts, the gap fill was something that stood out to me. Very, very simply, gap fill is when price opens either above or below the previous day's close and then retraces to that close. If it opens above, you can have a bearish bias targeting that previous close. And if it opens below, you have a bullish bias. So pretty much every day you get a bias and you get a target. To me, I was like, perfect. That's something I'm interested in. It's very simple. Now, obviously, the entries is up to me, but my bias is determined and my target is also determined. And what I noticed as I did more research was everyone just says that these gaps will fill. A blanket statement. Yeah, the gaps always fill, which is obviously not the case. Something that I realized was I can't take just someone's word for it. And I actually went and I started buying raw data for every stock that I wanted to trade. And I built an Excel model calculating how often are there gaps up? How often do those gaps up fill? And now I would layer in, I want to see it by weekday. Do different weekdays behave differently? I want to see it by gap size. I want to see it by the time the gap fills. And for anyone who's watching that is familiar with Excel, Excel is not built for that type of analysis where you start to layer variables on top of variables. I have certifications in Excel. Working in finance, I don't need the mouse. I know all the shortcuts. And it really was something that even for me took hours to figure out how I can do it. And then if I wanted to tweak one thing, it would be another set of 4 or 5 hours. And what we want to do is lower that barrier of entry for anyone that's new that doesn't have a background at Goldman Sachs or doesn't have a background in any sort of data. We want to say, here's the information you need. Here's the information that's going to help you determine your bias. That's going to give you the true probabilities. You don't need a PhD to understand it.
That's awesome, man. You're music to my ears. Let's go ahead and pull up some charts. By the way, I do want to mention on the gap, futures traders sometimes forget about the gap because it's a 23-hour marketplace.
Yeah.
And if you just look at a futures chart, there's not a lot of gaps. But if you think about where the equity market closed when New York bell rang and when it opened again, then that's when those gaps are there. And you're doing a great job of translating that. So let's take a peek.
Just so everyone can see on an actual chart here, we're talking about the regular trading hours, so the 4 p.m. close. So I'm going to the 3:55 candle and I'm plotting out the close here. Right here is the New York session, the current New York session starting at 9:30. And then down here.
By the way, let me interrupt for 1 second.
Yep.
For the viewers who are unfamiliar with what they're looking at, we've been using the NinjaTrader desktop trading platform. You're using the NinjaTrader web platform.
Yeah. So sorry about that. I do have a Mac. Web is honestly fantastic as well. Obviously, the desktop is much more thorough, but the web is fantastic. This is the gap that we're referring to. Now, today on ES, the gap was pretty small, but it did fill. What this means is that price today opened just below the previous session's close. A gap fill is when price comes up to touch that previous session's close. So what this means, right over here, you can see that there was a very small gap today. So I'll obviously highlight that it was very small, but it was a few points here on the ES. And this is something that typically if it's a little bit bigger, if it's 10 points or 15 points, and you can catch that move up, that's where you can say, this is a move, this is a bias, and you don't need to catch the whole 15 points either. You can capture 8 points on the ES or whatever it is. If it's 25 points or 30 points on the NQ, that's a fantastic move. There's your day for the most part, right?
Yeah, and then your software lets you actually track the odds of a percent of a gap fill happening.
Let's look at that quick. So looking at the gap fill report here, and I'll go to the last 6 months. So here we're looking on the left sidebar. We're looking at ES. We're looking at the gap fill report. That's the number 4 right over here. In the last 6 months, and that's from September 17th to Friday. In the New York session, so these boxes that I had plotted out before, these boxes. So looking strictly at if price retraces to previous session's close, for every time there was a gap down in the last 6 months, 66% of the time that gap has filled, which means that price has come up to touch that previous session's close. Now, the gaps up are actually a little bit different in the last 6 months, only 59%. Still very solid. Typically, I like to go for something that's 60 or above in terms of trying to entertain a trade, but still solid. What specifically this is measuring is for price to retrace to that previous session's close. So if I scroll down just quickly, we have this explainer section, and what I'm going to do is I'm going to click on the gap down fill. So in this example here, this would be the previous New York session close. Price opens below right over here, and you can see price rises to that previous session's close right over here. So what we can do on Edgeful is say, if I don't want to capture that entire move and I want to increase my chances here, what we can do is go to this customization, number 8 on the left side, and change this to be any percentage of the gap. So we actually recently added the ability to go in excess of the gap up to 200%, which would mean that price would have to go double, or you can go to 50%. So what this would mean is that price only has to touch halfway between the open and the previous close.
So by doing this, then you could decide how aggressive or conservative you want to be on the move. In other words, when to say, all right, enough is enough.
Correct. That's such a great point. And in addition to that, you can also say, if I think the gap is going to fill today, where is a great place to take just a piece off the table or take half of my position off the table and lock in a green or break-even trade? It doesn't mean you need to move your stops to break even, but let's have a data-backed target of the halfway point between the open and the previous close to tell you that 78% of the time in the last 6 months, price has reached the halfway point. So now you've increased your odds from 66 to 78. Like the probabilities are significantly higher. And then you look at the gaps up, goes from 59 to 73.
Yeah, that makes perfect sense. Now, let's say I don't want to go 6 months back because, we had an election, the end of year, we're in a new paradigm maybe, and I only wanted to go back for a shorter period of time. I could do the same analysis, right?
Exactly. You can actually go up to 5 years back. We have these preset 3 months, 6 months, whatever. And then you can also pick certain periods. So if you want to do the last 3 months, you can also do that. You can see in this case, in the last 3 months, gaps up have been filling more than gaps down. And then you can go in and change your probabilities. You can change it back to a traditional gap fill. And now let's look at the data. There it is. So 70% of the gaps up have filled in this case. So when you look at the shorter and more recent markets, the data has changed. And what's really nice about this is you're not buying some PDF from last year that's telling you this has happened in the second half of 2023. What you're doing is you're getting the most recent data for this market environment, and it updates every day. So you don't actually have to do anything on your end. All you have to do is open it up, and every day it updates. So as the markets shift, the data is going to update as well, and therefore your trading should update as well. For us to adapt to the markets is super important. That's where Edgeful comes in, so it does it for you. And very specific actually to the recent market environments. One that I want to show you is the opening range breakout. And we're going to be looking at ES here. And if you look at the last 6 months, so just for everyone who is not familiar, the opening range breakout is the high and the low of the first 15 minutes of the session. And you can customize this. For the sake of this example, I'm going to focus on the first 15 minutes. And what this report measures is how often does price only break out to the top side of the orb? How often does it only break out to the bottom side, which is this black one right here? And then how often will it break both sides of the orb? So in the last 6 months, a single break, which would be a break in a single direction, whether that's the bottom or the top, and a double break is almost 50-50. So to me, I'm not leaning towards one or the other as much. But when you go to the last month on ES, what you can see is that the data has very drastically changed. And the breakouts has only happened once in the last 20 trading days. So that means that price only breaks to the top side. Now let's look at this today. You can see here is my opening range. So I'll actually just move this down. Price has only broken out to the top side, right? And you can see the highest probability here is the 52, the double break. And if you know that the lowest probability is the breakout, that means that the moment price breaks out to this top side, you can get short targeting a double break because it is the highest probability of the three. Does that make sense?
Total sense, right. Now, I do got to throw in a past performance not indicative of future results at that point.
Of course.
Yeah, absolutely. Absolutely. It's
just one thing to add just in terms of the actual entries, it does not mean that you get short at the break. It means that this is a bias to develop, to use as confluence to enter a trade. By the way, nowhere in Edgeful do we give you a buy or sell signal, and it is not something that we will never do. This is data that you can use to apply to your current trading strategy or something that you're seeing. So in this case, of course, you do not want to just get short at the breakout. This is something where you can use to say, in the last X amount of time, this has happened. Therefore, my bias for the day should be towards the downside. And based on the data, it would not be surprising if price does make it to this or below, which is right over here.
Totally makes sense. Totally makes sense. And it's really complementary, right? So you're creating a bias within a bias, and then you're looking at your whatever indicators or technicals or levels that you use, whether it's gamma levels or fibs or pivots, whatever it is. Anthony's a big fan of Bollinger Bands. It's complementary to that, right? It's not giving you the answer, but it's helping support your trade idea.
Exactly. So every single report has the ability to be customized. So on the left side here, number 8, this is where you can customize any report regardless of what it is. That's how I changed the gap fill percentage from 100% to 50%. But here, if I click on that, we have a bunch of customizations for this report specifically. The one that we're going to be looking at here is the orb time frame. This changes the time frame of the candles used, so you can see opening range, and this is the time that we're looking at, 9:30 to 9:45. If I change this to be 30 minutes, it is going to change from 9 to 10. And then now, let's look at the data here. You can see that the double break is a little less likely in this case. And that's totally fine. There is no right answer. There's no right combination. It's just about what you like to trade and what applies to you and how you can really push and move the data around for it to suit your trading style with an acceptable threshold of a percentage that you want to trade.
Could you talk to the power hour reports a little bit?
For sure. So let's go to the power hour breakout report right over here. I'll actually go to my bookmarks because I know I have it bookmarked. Power hour breakout. And this is something that I like to use when I'm trading that last hour. So for some context, power hour is the last hour of the session. If you're trading the New York session, that's from 3 to 4 p.m. Eastern time. So what this report looks at, and I'll actually scroll down so we can get a little visual here. What this report looks at is how often is there a new high of day or a new low of day made in that last hour. Right over here, you can see, like if this blue box is from 9:30 to 3 p.m., and this yellow box is the actual power hour itself, how often does price make a new high during this last hour or make a new low? What you hear about the actual name of power hour is that it sounds like it's very crazy and that it's very chaotic and that there is going to be a lot going on. But what the data shows is that 81% of the time in the last 6 months, a new low of day was not made, and 72% of the time, a new high of day was not made. Which means that price has stayed within that range from 9:30 to 3 p.m. And I'll show you an example here, just because it's not 3 p.m. right now. This is an example where after 3 p.m., a new low of day is made. So people who like to trade power hour, what do you need to know? You need to understand that in the last 6 months, it is unlikely that price is going to break out of the current day's range, which means there's 2 ways really to take advantage of this. One, if you are long towards a new high of day, you might want to take the majority of your position off, not expecting price to break that high of day or at least reverse sack on you. So lock in your profits before the new high of day because obviously it's unlikely for that to happen. The same thing goes for the downside. If you're short as price comes down into the current low of day, you want to take your profits before that. Now, there's not a 0 chance. Obviously, any trade, any day, it could happen.
Yeah.
And even though this 82, rounding to 82%, is very high, by definition, that means that 18% of the time, it does happen. So be very mindful about the risk because these days could be, you don't know the sequence of when this plays out. This is really the most powerful piece, is just having that confidence to be able to say, I don't want to set my targets here because I know in the last 6 months, price has not actually gotten there X% of the time. That confidence to even say, I know that price in terms of the gap fill, in the last 6 months, price has done this, which gives me the confidence to sit in a trade that might be consolidating a little bit longer than I like, or might not be going exactly in my favor as soon as I enter. But I know overall the structure and the probabilities around the concept that I'm looking at, which helps me in my bias to stick to my winners and to cut my losers when they should be cut. Does that make sense?
Yeah, totally. Totally. So I appreciate you walking us through that. I just love it. It's a fantastic tool. So edgeful.com, you can go there, you can check it out and get involved with it. I think it's well worth it.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.